Thank you for having me. My name is Jonas Enderlein. I'm the CEO of Solutions, and today I'm going to give you an update about smart sourcing in real estate. Solutions is offering technology-based services for building operation to companies that either operate or own, sometimes both, huge building portfolios. And they usually face challenges that can be divided into two areas. Regulatory obligations, and of course you have commercial interests if you own or operate buildings. Drivers of those two dimensions are the number of assets under management. Obviously, more buildings create more challenges. The different asset classes, because it makes a difference if you have, let's say, residential buildings in your portfolio, or if you have office buildings or something like a hospital, for example, because you have different regulations and you have different challenges to face. The distribution of assets is also a deciding factor due to the fact that in Germany, we have 16 different Bundesländer with slightly different regulations in each Bundesland, and especially for big companies, that is a big challenge due to the fact that you have to adapt to the local regulations if you want to operate or own buildings in a certain Bundesland. Qualified staff, we all know this issue. We can read it on the media every day. In the end, it also depends on the data, on the documentation that I have about my portfolio to make good business decisions. How do companies conventionally deal with those challenges? Usually they hire a local craftsman, a service provider who gets the job done on site. Unfortunately, they are very old-fashioned companies usually, meaning that they don't use a lot of digital tools to do the work, meaning that they are pretty inefficient and that is very intransparent for the customer what the service provider actually does. And so the quality is pretty unsure, and the customer has to allocate additional resources in checking on his service provider in order to find out whether the service provider fulfills all the elements of the contract. This is why many companies introduce software in order to improve the situation, especially on the data, on the transparency side. And yes, you can potentially achieve a better data quality by introducing software, but this is usually connected to a high front-up investment. You have to pay for the license first. You have to pay for the training of your employees. And you end up with a situation where you get an off-the-shelf solution that might be a little bit adjusted to your needs, but that usually doesn't fit the process landscape that you have inside the company, because as a matter of fact, many companies have a very heterogeneous process landscape, meaning that at every location, people are working a bit differently. So it's very hard to introduce a software into such an environment. And this is why many companies end up having the local service provider, having the additional cost of the software, but really don't having the value add of the software in this. And many of the issues emerge from the fact that those two sides have been coming from different service providers in the market in the past. We have a hybrid approach. We also get the job done on site with our platform services. We provide the solution, not the tool as well, but we have designed our services with good data quality in mind and with digital tools in mind. However, you don't need to invest into software before starting to work with us as an owner or operator of a huge building portfolio. You can test our services at one location and then basically roll out to other locations. Due to the fact that we are very software driven and process driven, we can achieve a high level of efficiency way beyond what the market can provide at the moment. However, we cannot operate full buildings, but we are yet to extend our portfolio in order to provide more and more services. Currently, we are offering two services. One of them is operators obligations controlling, where we basically help our customers and their service providers to keep track of all upcoming services and upcoming checks and maintenances of the technical equipment within their buildings. This is a pretty complicated issue because depending on the facilities, for example, elevators or fire extinguishers, depending on the location, the Bundesland, for example, the size of the building, the asset class, you have different regulations, so different maintenance intervals and different types of checks you need to perform on your facilities, on your technical equipments. So this is a very complicated issue that the market is currently addressing with huge Excel sheets, and obviously that doesn't work in a situation where the regulatory obligations change from time to time. Why do you have to take care of this? Well, it's the law. So if you don't maintain your fire extinguishers or elevators on a regular basis, then you run into the risk of having authorities shut down the whole location, or also in case of people being hurt, you can face penalties, fees, and up to jail time of several years. So how do we address this problem? First, we upload all the documents about the building and about its facilities into our platform. We create a digital twin of all facilities and the building, and then we capture the situation on site using a mobile application. We capture each facility, and then afterwards we merge these two worlds into one. Then we have the status quo. And then we go over to a phase that is called monitoring, where we proactively warn the customer about upcoming checks and upcoming maintenances within their buildings and ask them for the documentation of these checks and maintenances so that we can basically make a red light green again and create an additional security layer for the customer in his portfolio. The second product is Roof Management 4.0, where we basically act as a high-tech roofer all over Germany. The first step here is, again, the digital twin of the roof. We create a digital twin of the roof because then it's easier to manage all the stakeholders that somehow interact with the roof. So we capture the situation on site. We take 360-degree photos so that you can virtually virtually go over the roof and check the condition of the roof. We create a digital building part catalog, and we also make a photo documentation of all damages that we can find on the roof together with GPS coordinates, so that we can then calculate the damages and offer to repair them with the help of our German partner network of small and mid-sized roofing companies that are equipped with a mobile application and can basically document their work that they do for us, for our customers. And in this scenario, we are the contractor of the customer and the partners are the contractors of us. Document their work, and basically we can then implement a portfolio-wide strategy of maintenance for our customers. How do we earn money with this? In the context of operators obligations controlling, we first do the audit. We have an average audit price of around 6K. This is not a small supermarket, but it's also not a big shopping center. It's somewhere in between. And then we have, for the monitoring, a yearly fee of around 50% of that, 3K in this context. And contract periods are 3 years. And if the contract is not canceled by the customer, it's prolonged by another year, the price is adjusted. As you can imagine, companies get very dependent on the system that we establish, the warning system, and of course, of the quality of the data that we can provide via software. In the context of Roof Management 4.0, we also have this the first phase of creating the digital twin, the digital capturing on site and evaluation, where we basically look at the condition of the roof first. Here we have an average price of 1,500 euros, and usually we already find damages on the roof. And as you can see here, it's slightly shifted and in purple because we do this together with our partner companies. We usually find damages on the roof that we calculate and offer to fix to our customers. And an average size for repair is around 6K. Then we do regular maintenances, usually spring maintenances, and a second maintenance in autumn. And due to weather conditions, due to the nature of the business model, of course, we get proportionally recurring damages on the roofs that we can then offer to calculate and repair to our customers. Contract periods are 3 years, and as in the other case as well, contracts get prolonged if they are not cancelled by the customers. Usually, if the customer doesn't tear down the whole building, we keep the contract. After taking a closer look at the products, we will dive a little bit into the numbers, and you can see that we have quite an interesting growth path so far. With roof management taking the lead, we have grown more than 80% in revenue last year. And if we look at the distribution of revenue over products and over quarters, you can see that the third and the fourth quarter are the most or are the highest in revenue, with the fourth quarter basically providing half the revenue of the whole year. This is because of the nature of the business model, where we capture new buildings in the first 1 or 2 quarters of the year. We analyze the situation on the roofs, and we calculate offers that are then ordered in the third or in the fourth quarter. And also the fact that some customers still have an open budget for the year and are able to fix some of the damages that we offer to them. So this is usually the strongest quarter within the year. But looking at the half years, you can also see that in 2024, we have a strong increase compared to the year before and nearly doubled the value of 2022. So we are also growing in the first 2 quarters, which we already published. Another important aspect of our business model is also the different types of revenue that we for the services that we charge. We have one-time revenue in the context of our audits for operators responsibility controlling or operators obligations controlling, and for the setups in the context of roof management 4.0. And then we have recurring proportional revenue, so returning revenue. This is basically the repairs, but we try to separate this from the real recurring revenue, as it requires an additional decision made by the customer. So this is basically the repair revenue, where we offer the customer to fix damages on the roofs, and they place an order, and then we can repair the damages on the roofs using our partner network. And as you can see, this is a substantial part of the revenue, but the recurring revenue, aka the maintenances and the monitoring fees, are growing as well. And yeah, this is the distribution of the different revenue types. If we look at the quarters of the past year, we can see that the fourth quarter, as I already mentioned, is pretty strong in repairs and returning revenue, due to the fact that the customers still have budget left, and we are able to fix the damages of the roofs that we captured throughout the year before. Looking at the cost structure, we can see that we optimized the other cost over the year. We have renegotiated existing contracts. We have gone down from 2 locations in Potsdam to 1 location. We have pushed remote due to the fact that we have a completely digital value chain, which was a really good idea to do. We merged some of the companies in our group so that we have now a very, very lightweight structure of just having 2 companies, the Solutiance AG and the Solution Services GmbH, which offers the services to the customer. And as you can see, while the revenue was rising, the other cost was decreasing. And as you can see, the cost of operations and the revenue are moving towards a gross margin of around, let's say, 30%. Looking at the quarters of last year, you can see that, of course, we had in the third and in the fourth quarter already pretty high level of revenue that was able to cover not only the cost of operations, but also the other costs. We will look into that at a later point if we look at the EBT again. And in the second quarter, you can see a slight increase in the other cost. This is just due to the annual shareholders meeting and the annual financial statements, because that's usually when this is charged. And looking at the half years, you can see that we have a slightly higher other cost this year, but this is due to the fact what I just mentioned, is that we merged another 2 companies in our group and have this lightweight structure now. This, of course, is connected to lawyer fees in the beginning, but afterwards this will pay off as we have a lower cost rate over the years. Something that we should definitely also mention is that we are still strongly investing into our intellectual property by means of a platform. We constantly improve the amount of human work needed for every order. So we try to reduce that more and more through automation. As you can see, we invest on a regular basis into that. So we have a team of developers, but we also try to cover some of the costs with R&D projects that are funded by the state. So whenever we create something that is really innovative as a project that can be funded, we try to do so. And we have just been confirmed 1 or 2 months ago that we have an approved application for an R&D project, and this will most likely be paid out next year, around 200K. We already talked about this in the past, but we are not planning with this due to the situations that we had in the past. So we consider this a bonus to everything else. Looking at the past year, we can see what I already mentioned earlier, that we had already like balanced third quarter, and that we had a positive EBT in the fourth quarter. And but we in 2023, this was not enough to compensate the first half year of 2023. But if we look at the numbers now, you can see that we have a slightly better EBT in 2024. So we plan to compensate the minus 0.3 million with the results of the third and the fourth quarter. But these numbers we haven't released yet. In terms of how the financial overview, or the sources of cash flow, we did some capital increases in the past. We are not planning on doing any capital increases anymore. We only have a working capital need, but due to the fact that we are getting closer and closer to being bankable, we were able to acquire a shareholders loan by one of our shareholders, which currently covers the working capital need that we have. To put it all in a nutshell, we have a unique and scalable business model. We bring together knowledge from different areas to create solutions that really add value for our customers. We have a very substantial customer base with a lot of growth potential with the customers that we already have, but we are winning new companies on a regular basis, and we have quite an interesting growth history. And yeah, thank you for following us. Thank you for your time.
Excellent. Thank you very much. We still have about 12 minutes left for some questions. So the first one is, how much revenue do you do with the companies of FCR AG?
Okay. So currently, we only had some test projects together with the FCR. Due to the fact that the FCR signed most of the capital increase, I think it was 2 years ago, and then we started working together. But this also, what was going on in parallel was a strong increase of interest rates, and so we postponed talking about this about proper ways of working together up to a point where like the interest rates are decreasing anymore, and we can fully focus on maybe working together in the FCR portfolio as well. So we will keep asking when there's less or let's say a less stressful situation in the market. Does that make sense?
Yeah, yes. And you published the first half year figures, and there's a question in the chat. Can you already talk about how the third quarter is coming along?
Obviously, no, without giving you an advantage, I'm not allowed to do that. But we will release the numbers of the third quarter pretty soon. I think 1 week and roughly 1 week or 1 to 2 weeks.
Okay. And coming back to the first half year numbers, so what factors contributed most to the strong growth in the revenue and order intake in the first half year?
We were able to establish we were able to win new customers, and something that is very positive from our perspective is the fact that usually customers in the past did 1 or 2 projects in the beginning, then they were looking into the results, then it took some time, then we were offering, then we created new offers for the rest of the portfolio. And for some customers, we were able to skip that and directly go into the whole portfolio, which is, of course, a big advantage because we can grow faster with the customers. So that was definitely one factor.
Okay. And what challenges are you facing with customer decision-making speeds, and how do you plan to mitigate the impact on quarterly forecasts?
So talking to more customers, talking to more relevant leads is definitely something that can partially compensate the long times that are needed in order to for decision making. This is definitely an issue, and it makes it very hard to predict the numbers in the future, because we usually, I mean, as you can see, Roof is taking the lead in terms of revenue. We first have to analyze the buildings, and then we can calculate, and then there's another decision to be made by the customer. So what we can say for sure is that we have a constant growth, but it's really, really hard to estimate still how high the revenue is going to be.
And can you tell us more about the recurring revenue structure?
Yes, so recurring revenue is mostly maintenances or just maintenances, and the monitoring fees. The monitoring fees, monitoring, I explained it, is where we proactively remind the customer of upcoming checks and maintenances of technical equipment within their portfolio. And the maintenances are the roof maintenance, spring maintenance, and yearly annual maintenance, which usually happens in autumn. And those are already written into the contract, and this is why we split the recurring revenue into 2 areas.
Okay. And can you talk again about the current market situation, the real estate crisis, and what are the opportunities and risks for you in this current situation?
Yes, so as you can see, a lot of companies face an issue with acquiring staff in order to take care of tasks basically within the companies, and especially in real estate. Real estate is facing issues from the past, the present, and the future. In the past, they haven't really had an effective digital transformation. Currently, they are facing higher regulations in terms of ESG and high interest rates. And for the future, the whole market or the whole industry wants to be more sustainable. So there's a lot of tasks that need to be solved, and there's very little people to solve these issues. And so a service provider which just takes a big chunk of the operational work and works properly is something that comes in handy. But we also see that some companies have smaller budgets. Some companies are more careful where they invest because they don't have that long-term perspective in some areas. And I think that when we see lower interest rates again, also the operators' obligations controlling is going to grow more quickly again, because it will shift the focus towards long-term perspective.
And what's your current guidance for 2024 and 2025?
So we have not yet a guidance for 2025. The current guidance that we have at this moment for 2024 is 9.3, with a corridor of 10% in the revenue. So 9.3 minus or plus 10%. And this is, yeah.
And in terms earnings? What kind of EBIT margins do you expect in the future?
In the past, I think I talked about let's say, a small plus, so a small EBT. It's going to be, we want it to be positive this year, but due to the fact that we have the corridor, this might either go up or go down, depending on the revenue that we achieve in the third and in the fourth quarter, because this is the point that is released. I cannot talk about the third or the fourth quarter without giving you an advantage. And another variable in this is the R&D project that is funded by the state, which would also go into the EBT.
Yeah. So we
will give an update on that with the Q3 numbers.
Okay. And when do you expect to break even?
This year.
Okay.
So we cannot tell for sure how Q1 and Q2 2025 will go, because it heavily depends on the weather and it heavily depends on the orders acquired in the first quarter, in the fourth quarter. But we will definitely get into a situation where if we in 2025 go below in the negative area concerning the EBT, we will be able to compensate this in the third and in the fourth quarter. And this is, I think, what you talk about if you talk about break even, right?
And will you consider another capital increase?
No.
Okay.
No, there's no need for it. And we are able to cover the working capital needs by shareholder loan and yeah.
Okay. And can you elaborate on the role of your partner network plays in supporting your growth, and how do you plan to expand it in the future?
So we need a German-wide partner network. We already have partners in many areas in Germany, so we can already cover the whole map. What we will be aiming for is redundancy, because roofing companies are sometimes busy. And if the roofing company that you have in a certain area is busy at the moment, you can simply not do the work. So what we will be aiming for is having a certain level of redundancy in our partner network, so that we are able to work on several projects in parallel within a certain area of Germany, and also have an alternative, let's say, if due to the partner being busy, he cannot do a job for us.
And how many shares is FCR holding?
I think I'm not allowed to give you that information.
Okay, but do you have an ownership structure?
I do have an ownership structure. Yes. So you can see that the management board has quite a substantial number of the total shares. We have the convertible bond left, which is 540,000 euros at a strike price of 2 euros. So we will have another 270,000 shares, something like that. And yeah, but you just see the management as a chunk here.
Yeah, perfect. So we don't have enough time for another question. Thank you very much. Great presentation, great many answers, and yeah, thank you again.
Thank you. Have a nice day. Thank you for having us.